All the details of the first monetary policy review of FY17. Joining us is my colleague Arun Sharma. Well, Arun, the markets were expecting that 25 basis point repo rate cut, and it happened. But perhaps global cues brought the markets down over 500 points, huh?
Of course, Mark. Now the global pressures were, or the global cues were putting pressure on the markets, and also the corporate sector, the stock markets were basically expecting a rate cut of 50 basis points at this moment, and therefore it didn't happen. But yes, 25 basis point was all expected. We'll get you more on that. But let's get to this report now. Reserve Bank of India has restarted the rate cut cycle after a 6-month pause. The Reserve Bank of India has slashed repo rate by 25 basis points. The policy, though, on the expected lines did have some surprises in store as well.
RBI Governor Raghuram Rajan cut the policy rate to 6.5%, taking note of falling retail inflation and the government's commitment to fiscal discipline. The first monetary policy of the new fiscal announced a cut of 25 basis points in the repo rate, no change in the cash reserve ratio, but in a surprise move, the RBI also raised the reverse repo. That's the rate lenders charge to the central bank by 25 basis points to 6%, while taking measures to ensure more availability of cash in the banking system.
After reviewing the economic outlook and prospects, the Reserve Bank of India cut the policy rate by a further 25 basis points. This means we have cut interest rates by a total of 150 basis points since the beginning of the accommodative cycle. Our attention in recent months has turned to seeing that this large quantum of rate cuts is passed through into borrowing rates.
The RBI forecasts the economy to grow at 7.6% in FY17. The central bank has maintained its FY17 CPI inflation target at 5%.
The monetary policy stance remains accommodative. Going forward, we will be looking for further monetary room in signs of good monsoon, further readings of low headline inflation, indications of softening in core inflation, and further evidence of transmission of rate cuts.
The RBI had cut its repo rate by 125 basis points last year. Banks, though, complaining of tight cash conditions, have lowered only their lending rates by around 60 basis points, preventing the RBI's rate cuts from feeding through to the broader economy. More important at this juncture is to ensure that the current and past policy rate cuts transmit to lending rates to benefit the common man. Bureau Report, DD News.
Well, so big question here, will the banks pass on these rate cuts to the common man? We'll try to understand from an example. If in case, now no banks as of now has cut the interest rate, but if in case the banks cut the interest rate, if in case you have a loan amount of 30 lakh rupees that you have borrowed, and if the tenure is 20 years, and if the loan rate is 9.50%, and after the rate cut, you'll be saving 488 rupees per month. This is your EMI saving. This is on the home loan part. If in case a rate cut takes place from your bank basically, and overall saving, that means for the 20-year period time, your overall saving would be 1,17,104. However, no bank as of now has announced any kind of rate cut from their side. Well, markets, if we talk about the stock markets, now it was not at all on the expected lines from the markets, because stock markets today tumbled by more than 500 points. If we talk about the Sensex was down by 516 points to end at 24,884. The major pressure was seen on the banking sector, or basically all the rate sensitive sectors like auto and realty as well. Well, Nifty also reflected the same mood, and it was down by more than 100 points, so basically 156 points to end just above the 7,600 level. So Nifty was able to control or to sustain this level of 7,600 level. So basically not too much of positive reaction from the stock markets. Well, to discuss on the RBI policy as to what impact will it have going forward, we are joined by economist Girish Jakotia from Mumbai. Girish, welcome to Newsnight. Let me ask you that now Reserve Bank of India basically has slashed the repo rate, and it has increased the reverse repo rate. Now, what is the intent behind taking this step?
Actually, everything going on favorably well on almost all the fronts, except, we expecting a good monsoon ahead. It was a welcome move by Mr. Governor that he brought it down by 25 basis point, although the expectation was for 50 basis point. And then, one may expect if the monsoon goes well in the days to come, Mr. Governor may go for another 50 basis point reduction in the rate as such. And when it comes to the reverse repo rate, it has been a surprising move. But then if you look at the money supply equilibrium, I would again give credit to Mr. Governor, having done so, because it also signals to the commercial banks and the other money players in the market that the scenario is very positive, and therefore the bank should really execute a reasonable cut in their lending rate, and that is perhaps the intention of Mr. Governor.
But Girish, can we expect these banks now passing on this benefit to the consumer as well? Because now MCLR is also introduced recently, which is marginal cost of funds lending rates. Now, will the MCLR also boost this transmission of this rate cut to the consumers?
It has to. Otherwise, it is so well connected. You won't then see a rate of growth in the manufacturing sector, which is so critical for our GDP expected rate of growth of around 7.5%. So the government too expects that the bank should pass on this rate cut to the, especially to the small and medium-sized enterprises.
So Girish, when you talk about the manufacturing sector, the small enterprises, now, do you think this 25 basis rate cut is enough for these kind of enterprises, the manufacturing sector? Because when you say these kind of corporates are expecting a rate cut, now, do you think the 25 basis point is enough for them, and they'll start coming and start investing in the markets, because and private investment will also start increasing? Do you think all these equations going forward to happening to be true?
If you ask me, optimally, I would have expected a 50 basis point rate cut, because the retail rate of inflation is down to 5%, and the overall scenario is very positive. Especially, I would say we are doing much better than the Chinese economy. The global mood about India is also very positive. Therefore, a 50 basis point was, of course, welcome. But then the 25 basis point also is okay, and expecting that you would go for another 50 to 75 basis point in next 8 to 9 months' time, provided the monsoon goes well. And I would add, something over here, that why depend on only the internal sourcing of funds and the Indian banks? Why not to look at Japan as such as a fund provider?
But Girish, do you think
that the government has got
Girish,
a
do you
bigger
think
role to play?
inflation still remains a major concern for Reserve Bank of India? Looking forward that the 7th Pay Commission is also gaining momentum, the OROP is also, if implemented, do you think these kind of policies also will weigh on the inflation? And that was the major concern for the RBI governor.
Absolutely. I agree with you, and therefore the RBI governor is little skeptical about the control on inflation, and one should also look at the coming monsoon, because a monsoon for last 2 years, if you look at a couple of states like a very progressive state like Maharashtra, it has been so difficult,
right,
to retain the rate of growth in agriculture and therefore related growth of growth in manufacturing. So a 25 basis point is okay, although not very optimistic.
All right. Thank you so much on that note, Girish, for explaining to us and telling us the impact of Reserve Bank of India's rate cut. Thank you so much, Girish, for joining us. Well, Girish clearly telling us that banks will sooner or later will be passing on this benefit to the consumers as well. So banks can pass it on to the consumers as well. So all eyes are on all the banks now, whether they pass it on the benefits to the consumers or not. Well, now talking about the Finance Minister, Arun Jaitley, well, he said that government is committed to the reform process, and it is a priority to increase investment in the infrastructure. Let's listen into him.
Our broad approach has been absolutely clear. We need investment, so we've opened out. We are trying to ease in our business environment in the country so that people feel attracted to do business in this country. We are trying to introduce fairness into the decision-making process so that government discretions are eliminated. We are trying to make sure that decision-making is quick. And there we have the advantage of a decisive leadership coming from the Prime Minister and his office.
Well, let's now get you the top line of the day. Finance Minister Arun Jaitley in a tweet says income tax refunds of 37,870 crore rupees issued in automated way and 67% issued within 30 days. Income tax department has processed more than 4.14 crore income tax returns. Now you can travel from Manesar to Mumbai directly bypassing Delhi. Transport Minister Nitin Gadkari inaugurates Palwal to Manesar section of the Western Expressway. This expressway to form a second ring road in Delhi. Commerce Minister Nirmala Sitharaman expresses hope that exports will be in positive terrain in this fiscal. Commerce Minister says many countries want FTA with India. Now, number of free trade agreement will open new markets for Indian exporters. Well, so that's it in this world of finance. For the news, back to you, Mark.
Thanks very much.